Welcome to The Deep Dive, the show designed to cut through the noise and give you the most important insights from today's business landscape. Today, we're taking a deep dive into Workday's Q2 Fiscal Year 2026 earnings call. A quarter that delivered some surprisingly strong numbers, yet, well, it left the market with plenty of questions. We're here to help you connect those dots.
That's right. For you, we're going to dissect Workday's latest financials, explore their incredibly aggressive push into AI and new markets, and perhaps most importantly, sort of unravel why the market reacted the way it did to their outlook. It's a fascinating puzzle, really, and we'll lay out all the pieces for you.
Okay, so let's kick things off with a snapshot of the results.
Yeah.
Because, on the surface, Workday delivered a genuinely strong Q2. They significantly surpassed what analysts were expecting in several key areas. Their adjusted earnings per share, that non-GAAP EPS, was what Wall Street really watches, right? To understand core profitability, stripping out the one-off stuff, well, it came in at $2.21.
Yeah, and that's a solid beat, about 9 cents against the consensus. And total revenue, $2.348 billion. So just nudging past the $2.34 billion forecast, that's a healthy 12.6% increase year over year.
Pretty good growth there.
Definitely. And digging deeper into those financials, the real core of Workday's recurring business subscription revenue, it really shined. Grew a robust 14.0% compared to last year, hitting $2.169 billion. And it wasn't just about the top line. Profitability soared. Their non-GAAP operating margin expanded to an impressive 29.0%.
Well, 29%, that's up from what, about 25 last year?
Exactly, 24.9% last year. So significant jump. And what's really critical here for, future revenue visibility is their CRPO, current remaining performance obligations. Basically, contracted revenue for the next 12 months. That figure stood at a very healthy $7.91 billion, up 16.4% year over year.
Okay, and what drove that CRPO growth?
It seems it was largely fueled by a flurry of renewal activity. They mentioned higher than expected early renewals, strong new ACV, that's annual contract value, and a booming partner ecosystem really contributing. Their total subscription backlog also grew substantially, up 17.6% to $25.37 billion. Huge number.
That backlog is massive. Shows long-term commitment.
Right. And cash flow was strong, too. $616 million in operating cash flow, $588 million in free cash flow, all while maintaining a, frankly, stellar gross revenue retention rate of 97%. Customers are sticking around. They finished the quarter with a hefty $8.22 billion in cash and marketable securities and about 19,500 workmates globally.
So on paper, like you said, a near perfect quarter. When you say strong financials, expanding margins, robust cash flow, customers clearly happy, yet the market's initial reaction told a more complex and honestly a perplexing story. To really understand that disconnect, we need to peel back the layers and look at Workday's strategic moves, specifically their aggressive, almost foundational push into AI. Okay, let's unpack this AI focus. It was a central theme resonating from the earnings call. And frankly, from Workday's entire strategy lately. They aren't just, bolting AI onto their platform. They're positioning it as absolutely fundamental to everything they do, and their secret weapon, as they see it. Their CEO pointed straight to Workday's massive data set.
Right, that data moat, over 75 million users.
And a staggering trillion transactions processed just last year alone. Think about that for a second. That gives them unparalleled insights into how people and money actually interact within organizations. It's a unique advantage for building purposeful AI.
What's genuinely fascinating here is how this isn't just slideware. It's not just talk. This AI integration is translating directly into significant, measurable customer adoption. Over 70% of Workday's core customers are now actively using Workday Illuminate. That's their suite of AI solutions, acting like smart assistants, predicting HR trends or automating finance tasks.
70% adoption is huge.
It really is. And the traction with new business is equally impressive. More than 75% of net new deals and over 30% of existing customer deals included one or more AI products. This isn't just some pilot program. It actually led to a doubling of net new ACV from AI products year over year. That shows real customer demand and a clear path to monetizing their AI investments.
So they're actually selling the AI features now.
Exactly. And they also announced an AI agent partner network, initial heavyweights like AWS, Google Cloud, PwC, Glean, alongside significant enhancements to their developer copilot, and get this, a doubling of their developer community. This signals a really robust, expanding ecosystem play, not just a standalone product push.
And this AI focus, it's also reflected in strategic acquisitions, right? Showing a very deliberate build and buy strategy. They signed a definitive agreement to acquire Paradox. That's an AI-powered conversational recruiting agent. Described as larger than previous recent M&A? Seems like a big bet.
It does. And the goal is to completely redefine the job application experience, especially for those high-volume frontline industries. Think retail, hospitality. It does this by combining Paradox with Workday's existing recruiting tools like HiredScore, creating a really comprehensive talent acquisition suite.
Okay, that makes sense. And wasn't there another acquisition too?
Yeah, they also scooped up Flowise. It's a low-code platform for building AI agents. Apparently, it's quite popular, noted for its 42,000 GitHub stars. This is all about accelerating how customers can build their own automations at scale, really putting the power of AI directly into their hands.
So build, buy, and enable customers to build themselves.
Precisely. These strategic acquisitions, coupled with the organic growth of things like Workday Extend Pro, where the ACV more than doubled year over year, and the Workday Marketplace, which now has over 100 live apps, doubling since the start of the fiscal year, it paints a clear picture. It highlights Workday's sophisticated multi-pronged platform strategy. They're expanding far beyond traditional HCM and financials. They're aiming to be the central nervous system for how people and money operate, all powered by AI.
And Workday is clearly not content to just dominate its existing space. They're strategically targeting entirely new sectors and geographies for growth. That's a big move.
Oh.
A prime example, the official launch of Workday Government.
Ah, yes, the dedicated subsidiary.
Right, wholly owned, dedicated to serving the unique, often complex needs of the U.S. public sector, including building a specific cloud environment with higher security levels, which is absolutely critical, non-negotiable really for government agencies.
And this move into the public sector, it comes amid strong engagement they're reporting across the Department of Defense, the intelligence community, and civilian agencies. It really positions Workday for what could be massive multi-year modernization efforts in government IT. Big potential there.
Definitely. And on the customer front, generally, they secured several major wins and significant expansions in Q2.
They did. Notably, Salesforce, a longtime HCM customer, impressively went live on Workday Financial Management and Accounting Center. That's a great example of successful cross-selling into existing big clients. Other full suite wins included the University of Virginia and UVA Health. That was apparently a highly competitive deal covering HCM, financials, and student solutions for both the university and its healthcare system. They also saw robust performance in financial services with an expansion at Nationwide Insurance, adding core financials to their Workday setup. These are all sticky, long-term relationships.
So landing big names and expanding within them. And their ambition isn't just U.S. focus, right? International was mentioned.
Yeah, international markets delivered a solid Q2 as well. Germany and UKI were called out as particular standouts. Workday also made its first deal in Vietnam with a company called Majin Group. And they're aggressively pushing directly into the Indian market. They've hired a president for India and are planning a local data center to support this significant expansion. It's all about global scale.
Okay, so lots of strategic moves. Now let's talk guidance. What does Workday see coming next?
Right, the outlook. For Q3 fiscal 26, they anticipate subscription revenue of about $2.235 billion. That represents a 14.1% year-over-year increase. And they guided to a non-GAAP operating margin of around 28% for Q3.
And for the full year, do they update that?
They did. For the full fiscal year 2026, the company actually raised its subscription revenue guidance, now expecting approximately $8.815 billion. That's a 14.2% year-over-year growth, and importantly, it incorporates the Paradox acquisition into that forecast. They also raised their full-year non-GAAP operating margin guidance to around 29%.
But 29% for the full-year margin. That's strong.
Very strong. And they boosted their operating cash flow outlook to $2.85 billion, projecting free cash flow to land at $2.65 billion. That's growing a very healthy 21%.
So what does this all mean when you put it together? Did management acknowledge any headwinds?
They did. Management acknowledged a broader software slowdown narrative that's kind of echoing through the industry right now. They're also keeping a close eye on international market dynamics and some pressures they're seeing in the state, local, and education, or SLED, business. That's a critical public sector segment, but often has long sales cycles and unique budget pressures.
Right, SLED can be tricky.
But despite those acknowledgments, they expressed strong confidence in their execution. They stated the selling environment has remained pretty consistent for the last year. And Workday's CEO, Carl Eschenbach, he directly tackled those investor concerns about AI potentially disrupting traditional seat-based SaaS models. He basically said those fears are completely overblown for Workday.
Why does he think they're immune?
Well, his reasoning makes sense. He points to their entrenched position with that massive customer base we discussed and their deeply integrated, purposeful AI capabilities. For them, it's not just adding AI features. AI is becoming part of the core platform. They are the AI platform for HR and finance, essentially.
Okay, so strong quarter, raised guidance, confident tone, which brings us back to the puzzle. Despite Workday delivering what we just described as strong Q2 beat, raising full-year guidance across the board, the immediate market reaction was, well, surprisingly cautious. Shares slipped over 3% in after-hours trading right after the call, closed down almost 3% the next day, and trading volume spiked. What gives?
Yeah, this raises that important question for you listening. Why the muted reaction to such strong results and optimistic outlook? What some analysts are calling a messaging gap really stands out here. It seems while Workday management was emphasizing robust AI demand, the increase in CRPO, the lifted full-year margin outlook, traders appeared to fixate almost entirely on the Q3 subscription revenue guidance.
The Q3 guide. But that was still showing 14% growth, right?
Exactly, but it was largely perceived as just in line with what analysts already expected, not a significant beat for the next quarter's outlook. And this seems to have led to short-term de-risking by some investors. It effectively overshadowed the incredibly positive long-term strategic narrative we just discussed. It suggests that even strong performance in key strategic areas like AI adoption can be overlooked when near-term growth cadences, even if perfectly reasonable, don't meet what can sometimes be elevated, maybe even irrational market expectations for every single quarter.
So the market got hung up on one inline number for the next quarter,
Yeah.
despite positive long-term signals.
It certainly looks that way in the immediate reaction. And this cautious sentiment comes at a pivotal time as Workday really looks to cement its transition, moving from being seen just as a dominant HCM provider to becoming this unified people and money AI platform. They're actively trying to expand their wallet share through that ecosystem leverage and broad back-office cloud consolidation.
Okay, so looking ahead, what should people keep an eye on? What are the key catalysts?
Definitely keep your eyes on the Workday Rising and Analyst Day event. That's scheduled for September 16th, 2025. That's expected to provide much deeper insights into their AI and product roadmaps, and it could potentially re-energize that long-term narrative. And of course, the anticipated closure and integration of the Paradox acquisition later in Q3 will be watched very closely. How smoothly does that integrate? What impact does it have? The market will undoubtedly be watching to see how all these strategic plays translate into future revenue growth, especially beyond that immediate Q3 forecast everyone seemed focused on.
Right. Makes sense. Okay. As always, this next segment is absolutely not financial advice. It's purely an exploration of ideas, not a recommendation to buy or sell anything. We always encourage you to do your own research.
Okay, so with that disclaimer firmly in place, given Workday's post-earnings dip, which, as we just discussed, seems driven by the market's laser focus on that single quarter's inline guide, you might be looking at a truly intriguing opportunity here. I'm going to make a case for a long position in WDAY with maybe a 12-month horizon.
Interesting. So betting against the short-term reaction.
Exactly. The market seems to be de-risking based on what looks like a messaging gap, essentially a short-term perception issue. But the underlying strategic moves Workday is making are incredibly powerful and, I think, frankly, underappreciated in the short term. Consider the Paradox acquisition again. It focuses on conversational AI specifically for frontline talent acquisition, high-volume hiring.
Which isn't their traditional core enterprise focus, right?
Right. Integrated with Workday's massive clean data moat, this significantly expands their total addressable market into that high-volume hiring space. Think retail, logistics, healthcare support staff, a segment often overlooked by complex enterprise software. This is a crucial, potentially game-changing expansion of their talent suite. Now, couple that with the strategic launch of Workday Government and its specific cloud environment for federal agencies, a segment desperate for modernization and AI solutions.
So two major market expansions happening simultaneously.
Yes. Workday is deliberately expanding its wallet share in two critical, sticky, and growing areas. This isn't just incremental improvement, it feels transformative. So this trade idea is a direct bet against the current market short-termism fixated on the Q3 guide, and it's a confident wager on Workday's long-term evolution into that unified people and money AI platform. The CEO's dismissal of AI disruption to seat-based models' fears seems pretty well-founded, given their entrenched position in that aggressive integrated AI strategy, and that upcoming Workday Rising event in September. It could provide further clarity on the AI roadmap, potentially acting as the catalyst needed to re-rate the stock once the market shifts its focus beyond the immediate Q3 outlook. It feels like a classic case of short-term noise versus long-term signal right now.
Okay, quite the compelling case there. So to bring it all together for everyone listening,
Yeah.
Workday delivered a really strong Q2, fueled by impressive financial metrics and a clear, aggressive strategy centered on AI, strategic acquisitions like Paradox and Flowise, and bold expansion into key sectors like the U.S. public sector and vast international markets like India.
Right. But despite these compelling strategic moves and a raised full-year outlook, the market showed caution. It primarily fixated on that technically in-line Q3 subscription revenue guidance. This creates a really interesting dynamic for you, especially if you're looking beyond those immediate quarterly fluctuations and considering the longer-term strategic plays Workday is making. It highlights how even stellar operational performance can sometimes be misjudged or at least temporarily overshadowed by a market laser-focused on near-term growth cadences.
Absolutely. This deep dive into Workday's journey is, of course, for informational purposes only. We hope it helps you connect the dots and gain a clearer understanding of what's really happening behind the headlines. But it leaves us with this provocative thought for you to consider. In an AI-driven future, where the lines between software and intelligence really start to blur, can a company like Workday, with its deep data moat and integrated strategy, truly transcend these short-term market anxieties? Can it be accurately valued for the transformative platform it aims to become? What will it take, really, for the market to fully appreciate the long game they seem to be playing? As always, we encourage you to do your own research before making any decisions. Thank you for tuning in to the Deep Dive.